Welcome back, Adam here. Today I'm going to be telling you all you need to know about payments on account for self-assessment. To do this, I'm going to show you a live example of payments on account being applied to a tax return, and then I'm going to walk you through when they need paying, how they're calculated, what's causing them, and how to reduce your payments on account. Before we get into it today, don't forget to like the video and subscribe to the channel for more helpful tax content. I'm going to link down below to the GoSimpleTax page so you can access the exact same software that I'm going to be using throughout today's video. You'll just need an email address, a UTR number, and your basic contact information to get signed up. Now let's get logged in and take a look at what payments on account are and how they appear on a tax return. So here I am, I'm logged into my GoSimpleTax account. You can see I'm in the 22-23 tax year, and I've set myself up just as an example with some self-employed income, £40,000 of income and a small amount of expenses here, resulting in a profit and therefore a tax liability. Tax liability at the moment is coming out as £8,000 and 10 pence. You can see that in the top left here. From here then, let's go and have a look at how payments on account are going to get applied to this and where they'll show on the tax return. So if I save and continue, and I'm happy to move on to the next page, continue through to review your calculation and proceed. And then this page is where you're going to see the details of your tax calculation. So how tax is being applied to that income that I've declared. Just to talk you through this. So we've got £5,226.20 tax liability. That's income tax, being the usual income tax rates, 20%, 40%, 45% being applied to my self-employed income. Because it's self-employed income, I'm also going to have class 4 national insurance applied to a certain amount of it over a certain level, and that's coming out at £2,606.95. Self-employed individuals also have to pay class 2 national insurance, which is a fixed rate of £3.15 per week, and I'm being charged for 52 weeks here, so you can see that being added into the calculation. That gives me my total tax liability of £8,000 and 10 pence, which agrees exactly back to what we saw on the previous page. After that, we're looking at any tax that has been paid at source. That's going to get deducted. So if you've got employment income and your employer is deducting tax through PAYE, or less common now, but still possible, where a bank withholds tax on interest that you earn, that would get deducted off here. You declare it on the tax return and it's going to get deducted here, so you're not paying it twice. Then we're looking at payments on account. This is the first mention of payments on account, but this is actually talking about payments on account that were made in the previous year that relate to this year. Now in this example, this is the first year that I've had to make payments on account. So there's not going to be anything in this box, hence why we're seeing 0 in here. But if I had made payments on account in the previous tax year, they would show in here and they would be deducted off my tax liability. The balance of the year is therefore £8,010 because I haven't made any payments on account. I haven't had any tax deducted at source. So it's the full amount that I'm paying. And then at the very end, you'll see another mention of payments on account. Now, these are payments on account towards the following tax year's liability. So this is what we're interested in here. Payment on account for 23-24, which is the next tax year, to be made by the 31st of January. And that's coming out as £3,916.58. So before we dive into this too much, what I'm going to do, I'm going to switch across to HMRC's guidance on payments on account. We'll read through that and then we'll come back to this where it will make a little bit more sense. So here's HMRC's guidance on payments on account. Payments on account are advanced payments towards your tax bill, including class 4 national insurance if you are self-employed. You have to make 2 payments on account every year unless, so that means everybody has to make payments on account unless these next 2 points apply to you. Firstly, your last self-assessment tax bill was less than £1,000. So if you have a small tax liability, then you can avoid making payments on account. HMRC aren't so bothered about collecting it off you as you move through the tax year. Or you paid more than 80% of the previous year's tax owed, for example, through your tax code or because your bank had already deducted interest on your savings. So the second reason that you might avoid payments on account is where potentially you have a tax liability in excess of £1,000, but if the vast majority, 80% of that liability is being collected at source, maybe through your employment, maybe through your bank, then potentially you could avoid making payments on account there. Everybody else though should be making payments on account. And it goes on to say, each payment is half of your previous year's tax bill. Payments are usually due by midnight on the 31st of January and the 31st of July. If you still have tax to pay after you've made your payments on account, you must make a balancing payment by midnight on the 31st of January next year. So now that we've read through the HMRC guidance, this may start to make a little bit more sense. So our payment on account here, 391658, is applying to our tax liability plus the class 4 national insurance. So you can see that it's almost half of the total liability. The reason for the difference, the reason it's slightly less than half, is because it's not taking into account the class 2 national insurance. So if you add together 522,620 with 260695 and divide that by 2, it comes back to 391658. We can also see here that as per the guidance, we've got one payment on account that needs to be made by the 31st of January. That's your first payment on account. And again, because this is my first year of payments on account, I need to pay that along with the tax year's liability, along with the £8,000 and 10 pence, meaning by the end of January, I've actually got to pay £11,916 and 68 pence. My second payment on account is then due by the 31st of July. Remember, midnight is the deadline. And again, it's the same amount, 391658. Now, assuming that next year my tax situation doesn't change, I have the same amount of income, same amount of expenses, and my tax liability comes in again at £8,000, what you'd expect to see next year is these two payments on account will actually then show in this box here. They'll show as deductions from my liability, my 23-24 liability, meaning that assuming exactly the same level of income, the only amount owing next year for the 23-24 tax year would actually be my class 2 national insurance, because I would have already paid the tax liability and the class 4 national insurance. So 166.95 would be my liability next year in theory. Now, I will just point out one thing here, because I don't think the HMRC guidance is particularly clear on this, but not all income on your self-assessment tax return will actually count towards your payments on account. So just to show you this as an example, if I head back to the data entry pages, if I add a new page, and I look at capital gains income, and I can put any gain in here. I'll just put capital gain in the narrative. It doesn't particularly matter how much I put in, although I need to take into account the fact that you get a £12,500 or £12,300 allowance. So I'm going to put that I sold £20,000 worth of shares, which will leave me with a £20,000 gain for the tax year. You can see here that the amount of tax due has increased. It went up by £770 there. So you might expect your payments on account to increase as well. But if I head back through to the actual tax calculation page and we take a look at how the payments on account are being applied, what you're going to notice is that your payments on account don't actually change in that scenario. So because it's a capital gain, HMRC are aware that if you've disposed of an asset this year, you're very unlikely to then dispose of it again next year because you don't have it anymore. Your capital gain isn't going to be considered regular income, so there'll be no point in making payments on account towards next year's capital gain, because it's likely that you won't have one as you already disposed of the asset. Or if you do, it's going to be a different gain, different amount, so it'll be very difficult to kind of predict that. So you can see in here that although my tax liability has increased to £12,000 payable, it hasn't impacted my payments on account. They remain the same. So that's worth noting for capital gains in particular. Now, I did mention that your tax liability is unlikely to remain at the same level from year to year. It could be that your tax liability increases because you're earning more money. If that's the case, and you don't have to worry about your payments on account, you don't have to worry about trying to increase them to cover that increased tax liability. It's fine to make the payments on account that have been suggested by HMRC, and then you would just catch up any increase with your balancing payment. On the other hand though, your tax liability could decrease. Now, if that happens without you really knowing much about it, you weren't sure how much income you would have, and your tax liability decreases, again, it's not really a problem. You'll just get a payment back from HMRC if you've overpaid tax during the tax year. But HMRC know that that can be a bit of a pain. It can be a problem with cash flow. If you're paying out too much tax, claiming it back at a later point, of course, you get the money back, but it's not great for paying your bills in the meantime. So what they allow you to do is reduce your payments on account. Providing you're aware and you can safely say my tax liability in the next year is going to decrease, then you're perfectly entitled to reduce your payments on account to account for that. Now, to do that, what you'll need to do, if I head back to the input pages and I save and continue, on this page, you'll be presented with an option to reduce your 23-24 payments on account. So if I click yes here, we're presented with a couple more questions. So you can reduce your payments on account to whatever level you like. If you want to reduce them down to 0, you can, providing you have a good reason to do so and providing you're expecting 0 tax liability in the following year. However, I would just exercise a little bit of caution here, because if you reduce your payments on account and as a result of that reduction you underpaid tax in the following tax year, then HMRC reserve the right to charge you interest and potentially penalties on that as well. So just be aware not to overdo it reducing your payments on account. But to do so, if I did want to reduce these, then what I could do, let's say I wanted to pay, I think my tax liability next year is going to be £5,000 overall. So I've got a big reduction in my income and my tax liability is going to drop down. What I can do here, I'm inputting the amount that I'm going to make on each payment on account. So I'll make one payment in January and one in July. So £2,500 each will total my £5,000 liability. I'll then need to provide details of why I'm making that claim to reduce my payments on account. So in this case, I had self-employed income. So I can say I'm expecting my self-employed profits to decrease next tax year. And that would be sufficient to explain to HMRC why you're doing that. You can put a little bit more, you can put a little bit less, providing you're getting your point across there. If I then head back to the calculation page, again, we should see that those payments on account have been overwritten with my £2,500 that I've entered. And here, instead of paying nearly £4,000 for each payment on account, you can see that my £2,500 entry has overwritten these. That was everything you need to know about payments on account and how you can reduce your payments on account. I hope you found that useful. Remember, you'll find a link below to the GoSimpleTax software that was used today to simplify the submission of your tax returns. Thank you for watching. See you next time.